Welcome all to this podcast by Spring Money. I'm Omkar, and today with us we have Vishal Shah from Bachat. Vishal is a SEBI-registered investment advisor, very passionate about personal finance. He himself is a CA as well, and he has been writing his blog for over more than a decade. His entire practice has been about three keywords: transparency, ease, and unbiasedness. Uh, would love to hear Vishal directly from you. What is the origin of these values, and how in general do you feel about these words as well?
So before we start our discussion, anyways, the usual disclaimer which is there, whatever we are discussing here, is just for educational purpose and information purpose. Uh, any advice, we are not providing any advice here. Advice needs to be person specific and case to case. Thanks, Omkar. Thanks for inviting me for this, and it has been always been pleasure to meet you guys at Spin Money and the things you are doing at Spin Money, which is very wonderful.
Thank you.
So like you are right. So at Bachat, there are three values which we follow. One is about the transparency, unbiased, and the ease. And entire our planning and operations are centered around these three values. So just to explain where this origin came from, I will go back to a few years back when I was doing my CFA. And at that time, I started learning about investments and finance and understanding about the importance of financial planning in the day-to-day aspect. And at that time, I noticed that there was not much awareness in India about this. This was around in 2008, 2010 period. There was not much awareness about the financial planning in India as such, and whatever awareness was there was not correct as such. There were many misguided uh, advertisements and posts which were there and stuff like that. So there were many misguided posts and advertisements as well on the financial planning front. So I started blogging about certain things which I was understanding, and the idea was just to share my knowledge with other guys. So if I can get one of the examples per se, at that time. Currently, we have certain tax deductions under the income tax at 1 lakh 50,000 under ETC if you invest in ELSS funds or PF and other stuff. There was similar deduction at that point of time. It was restricted to 1 lakh, and there was an additional 20,000 deduction if you invest in certain bonds, which will give you certain returns, and you infrastructure bonds, and you will get additional deduction of 20,000. So people used to market those bonds which were yielding 8.5%, saying that ultimately your final yield is 17 to 18% as such, and which was not very true as such. It was not applicable for everyone also. So the way they were marketing stuff like that were very poor. So that's why I started blogging about it. In fact, that became one of my most popular posts as such, and from where the traction started as such. So that's what I wanted to do. So the idea of that blog was to be transparent and to give the idea about the investment in a way that the common man can able to understand. That's where the easy part of the financial planning comes into the picture. And unbiased is as a nature of an RIA, registered investment advisor. We are not associated with any financial institution or mutual fund company. So for us, the client or the customer is at the center of the entire practice, and whatever advice we give is completely unbiased and conflict free. So that's how the idea about Bachat started as such. And over the period, I was blogging, and then later on, I started this practice about financial planning, and the concepts remain the same, the values remain the same, and focus is on the same thing.
Right. I mean, as you said, in today's very confusing financial landscape, these three elements are very important. And again, as we at Spring Money also understand, the unbiasedness is a very key value for any customer, for any client. And we genuinely do appreciate you, like people like you, actually coming in, leaving their other professions and helping people with financial clarity and confidence as well. So thank you so much for that.
So at Bachat, that's what we do as a part of the financial planning, and the model which we follow is the fees-free advisory, where the fees which the client pays remains the same irrespective of the corpus which they are having, and irrespective of the goals and complexity of the goals as such. So idea is to provide them a holistic financial planning which encompasses not only the investment things but also about the insurance, tax related aspects, and maybe a will, succession planning, estate planning, and everything. So that's what the idea is at Bachat.
So thanks for explaining this. Again, in today's very confusing financial landscape, transparency or even unbiasedness becomes very important. What I think we appreciate more is that you not only focus on the investments part, because unfortunately, when people think about personal finance, they probably most of the time think about investments, but you trying to encompass all the other elements of personal finance in the same gambit is truly appreciable. So thanks for that as well. So we genuinely do appreciate the fact that you not only focus on investments, but also touch upon other areas of personal finance and try to give a, as you said, holistic financial service to your clients. Thank you very much for that as well. So we were just researching about Bachat as well. And we realized this very interesting term, which is person first finance legal. Would love to know more about it. Probably people come to you specifically when the markets are down. They will have certain insecurities, anxieties as well. How do you use this motto and how do you actually incorporate it in your regular practice as well? Would love to hear about it.
Yeah, so I personally believe very much is that in personal finance, the person is more important than the finance. Finance and investment anybody can do, but to handhold the person, the individual, to guide them in a right on a correct path, to ensure that they don't make the wrong decisions at certain crucial junctions, and those that are few of the more important job. That is one of the most important job of a financial planner as such. The plan can be prepared in few months and can be implemented for a long term. But what to do in case when the market are rising substantially, or what to do when the markets have fall down drastically in few days? How to behave in such scenarios? What to do in case some emergency happens in the family? How to react to that? And all those things. At that time, the role and importance of financial planner is much more crucial, and that's where the most of the time is also devoted as such. And understanding the petty nuances of the clients and his families, who all are the dependents and all those things, and accordingly building a financial plan based on that. So those are the few important things which we focus on. The idea is ultimately there should be a peace of mind. A person should be able to sleep very peacefully at night, irrespective of whether it is thundering or it is flooding outside. He should be able to get a peaceful sleep. So that's what the focus is at Bachat.
I mean, very wonderfully put. At the end of the day, peace of mind is what you genuinely value, not just for yourself, but for your customers as well. And obviously, as you said, returns, markets, investments, these things will keep happening. But if you are not at peace with yourself, with your family, then probably nothing is, nothing is as valuable as that, definitely. Uh, just let's deep dive into a couple of things about it. Me as personally as well, get slightly confused specifically about the investments part. So there are these certain areas where people might not understand if that's an investment, if that's an asset, or if that's something else. Talking about real estate, would love to hear about your view on real estate as an overall probably financial instrument and in general other utility as well. Yeah.
Yeah. So real estate is one of the biggest investment you can say a person makes in his lifetime, and that's more so from a own living point of view. They would be staying on in that specific asset, and what happens is whatever earnings are there. Most part of the earnings which are earned in the early 20s or 30s goes into buying that specific asset. It is actually not an income generating. So the definition of any asset, a classic definition of asset is to generate an income for you. Here, once you purchase that home for your own living, it is not generating any additional income for you.
Right.
Other than the price of that asset is getting appreciated year on year, in case it may have appreciated, but otherwise there is no income being generated out of that.
Right.
Even if the price is appreciated, if you sell it, you will have to purchase some another asset of a similar kind to stay for yourself. So the base investment, the home where the people are living, we don't consider that as a part of the portfolio as such, and for to grow in that. Uh, Having said that, some portion of the portfolio is diversified into real estate, and that can be done by way of real estate investment trust, where there are options available where it's not the outflow is not very high. You can invest certain minimum amount, and you can still get an exposure to real estate returns and rentals out of real estate. So that's what we built it as a part of the financial plan.
Right. Thanks for explaining that definitely. And thanks for even touching about the small, probably not so popular concept of REITs as well, real estate investment trust, as you said.
Yeah.
this part is probably something which couple of my friends, specifically NRI friends, who obviously have went abroad for studies and then are doing their jobs there, would love to understand, not just for real estate as an investment class, but in general, how should they be looking at financial planning? And do you, as Bachat, also do anything for these guys?
Yeah. So NRIs is very different use case scenario as such. So what the many of the NRIs, they have been in India. They went outside India for higher studies, got relocated there, having their job there, and ultimately they are planning to come back to India after a few years once they have generated a substantial amount of wealth and corpus. So we at Bachhat do focus on that. So we have an expertise in managing the financial finances for the NRIs and doing the financial planning. So accordingly, we fine tune the goals for them depending on the requirements. Few of the NRIs want to come back to India and be there for the part of the retirement life, be there in India. Few of the NRIs are there that they want to settle in the country where they are currently working, and there are no plans to return to India. So we manage both type of scenarios as such. There are cases where people have worked outside. They have now moved back to India, but still their funds are in US assets or other international assets. So how to manage their funds, how to take their income tax angle into that, how to ensure that the tax is not paid on in both the countries, because the asset is lying in some other country and they are residing in India. So in case there is any gains are there, then how to avoid the double taxation point of view. All those things we take into consideration and do the planning. Another important thing which many NRIs are not aware, especially US-based NRIs are, they have restrictions in certain types of investment in a way that they should not do the investments in, for example, for US-based NRIs, they should not do investments in Indian mutual fund directly. The US regulation says that as per the US regulation, any unrealized gains on those mutual fund units are required to be taxed, and the tax needs to be paid in US, irrespective of whether you are sold or not, which is quite cumbersome. So many people are not aware about that. So this specific rule is the PFIC rule, which is there. So when people keep on investing in mutual funds from US, but ideally that should not be the correct way to do it. So there are like this, there are many nitty-gritties which needs to be taken care of. If the person is from US, then this is the to-do list and not to-do list. If the person is say from UAE, this is the things which he should focus on. These are the things he should not focus on. It's not a single plan for everybody. And accordingly, based on the person where he is located, what would be his future, where he would like to be spending his retirement life, and accordingly we do the planning.
Yeah, I mean, as you rightly said, there is no one single plan for everyone. And I'm sure that, as you said, for country-wise, the regulations change, and then you have to consider all the rules and regulations, not just for India, how India treats those assets, but also how those countries treat Indian assets and investments as well. Probably what people might think that they themselves have the energy or they themselves have the time with all the plethora of information available out there. India also going through a complete digital transformation. Do you think that people themselves are capable of managing everything on their own? Or how exactly do you again bring value with this different transformation that we are witnessing?
Yeah, so from a digital point of view, there have been lots of progress over the last few years, and there have been lots of tools available at the hands of the investor. The focus of this tool is to make the implementation easy. So now you can purchase something at a click of the button, and if you want to sell it, you can sell it by click of the button, irrespective of whether it is in India or outside India. The certain tools are there which will help you to analyze your past performance and past behaviors as such, how your portfolio performed in the past and whether that specific fund is good or not and what to do about that fund. So those tools are pretty handy, which takes care of all these things. But one thing which is still lacking, and it will be lacking, is the behavioral aspect of the investor and the person. The tools will not be knowing that that person is residing in US and he want to spend his future in India once he retire after say 55 years of age or something like that. So tools will not be able to take that into consideration, or tool may not be able to take that as there is an insurance policy which is more of an investment plan. any tool will tell you that you surrender that you will get certain extra return instead of having only 5 to 6% return. But there may be some emotional value that insurance policy, maybe the Trans would have given that as a gift on the first birthday.
Yeah.
And they want to continue. It may not be a very big amount as such, but they want to continue as such. So all those things, tools will be a medium to as a part of the financial planning, but it cannot be the only thing based on which the investment and the planning needs to be done.
Very aptly said. I mean, sentiments, emotions, these do come very, like, they are a part of, in general, how we manage our own personal finances, how probably your clients also manage their personal finances. And again, as you rightly said, it is very crucial that you as a human, you as an advisor are catering to those emotions as well. And you are not just looking at numbers and not just trying to create plans for them. Would like to double click on this question. Any particular tools that you are very fond of, which you like to use while serving your clients? And second is obviously when we are talking about digital transformation, we have to talk about AI as well. So your outlook on AI, how you are using it in your own practice, and in general, how people should be treating AI specifically when it comes to personal finance.
The tools which we use as a part of our practice are the standard market tools which are available, which does the analysis of your portfolio and the way you have invested and purchased and sold the investment in the past. So that are the basic tools which we are using as such. From analytics point of view, AI helps in a subtle way in understanding certain documents which are pretty heavy. Right. For example, there's an insurance policy which is there and clients want to know what are the nitty-gritties of those policies. Yeah. What all things are covered and what all things are not covered. So AI is a good tool to summarize certain things, and then we can give them into certain specific aspects of the policy and refer to this policy and explain it to the client. So these are currently the use cases which are there, the way we are using as a part of the planning.
But do you think that people are likely or people will feel like using this AI tools for their investment or any other actual planning as well? And what would you in general tell people about this?
So people are going to use it. People have started using it, but it depends on the way you ask the question. Basically, that's famously garbage in, garbage out. Yeah. So right. So if you don't ask the question correctly, the output will not be correctly. In fact, I got one of my clients who was there. He said that I wanted to understand certain IRR which I'm making if I'm doing the investment so and so. I asked to chat GPT and the answer was something which I didn't believe. So he came back to me saying that whether this is correct, this is what the response given by the chat GPT. So I said that no, it is not correct, and this is the answer. Then I told him that let me ask the question. I asked the question in a way the encompassing everything. Right. And the answer which was given by the chat GPT was same which I conveyed to the client, and not the one which the client got it. Yeah. So the idea is, the objective is you should ask the right questions. You should know what all things to ask to the AI so that he can give you the correct solution for that. So AIs will be there for basic tasks. The investor can use the AI. Yeah. But in case the task gets complex, you want to cover various angles about the tax aspect, jurisdiction aspects, and other laws also. It is best to leave it the use of the AI also to the professional.
Yeah, I mean, again, wonderfully put. This is what we also truly believe in. That the value of advisor is not just to give the answers, but also to ask the right questions. And obviously, whoever is a newbie, whoever is just getting started, or even a professional, even a veteran as well, they might not know exactly what to ask. And that is where your experience, that is where your expertise comes in. Again, as you said, asking the right questions even to the person as well as to the AI as well. And that, as you said, garbage in, garbage out. Similarly, the more better questions you ask, the more better answers you will end up getting. Moving on, another very interesting topic, what I have also been thinking of myself, and I'm sure that many people end up thinking about, is the entire concept of passive investing. Or in general, let's compare what's your take about active versus passive investing, and in general, how people should also perceive it.
So it is a never-ending debate between active and passive. So what do we mean? Let me just explain you what is the active versus passive investing. So the active investing is you select certain stocks out of the index to purchase because you feel that those stocks will outperform the index and you will get extra return. That's what many of the mutual funds also do. The fund managers also do. The PMS managers also do the same way.
Exactly.
investing is that you don't select any specific stock. You invest your entire money in the index where those stocks are located. So, for example, if you have 1 lakh rupees in active investing, you can divide that 1 lakh rupees into 20,000 each into 5 companies and monitor your return.
Right.
In passive investing, that 1 lakh rupees will go into Nifty 50 companies in the same proportion. The Nifty 50 companies are in the index, and it will be equally distributed between all those companies. The outcome of both is in the active investing, you will generate returns, higher returns than the index if those 5 companies do well. If those 5 companies doesn't do well, then your returns will be less than the index. In passive investing, your returns will always be in line with the market. So if the market has increased by say 12% in a year, the returns also what you will get will be 12%. It will be neither more, neither less. So that you need not worry about the uh, uh, up and downs in the market per se. So that's the basic difference between active and passive investing. What we have seen, and it is globally, if you see in US, uh, passive investments have fared better than the active investment per se. The returns which the investors have got in passive investments are higher than the active investment.
Okay.
In India, the passive investments, the concept as such is fairly new, but it is pretty much picking up over the last few years.
Okay.
There is a report which is there, which is a S&P index versus active SPIVA report,
Okay.
which is published globally for all major economies, and it is also published for India.
Okay.
They have been doing that since last few years, and what they do is they compare the performance of active funds vis-a-vis the index per se. And the latest report which they have, in that they have said that 100% of the large cap active funds have underperformed the index in last 5 years.
Okay.
That's the statistics which they have put it.
Interesting.
If we and for that percentage for mid and small cap is 75%. So 75% of the funds have underperformed the mid and small cap index per se. If we extend the period from 5 years to 10 years, then the percentage for large cap income reduces slightly to 75%, but still majority. So 75% of the funds are not performing more than the index per se. So why to invest in the active funds where you have to pay in additional fees to the fund manager also, and afterwards you are underperforming.
Right.
So that's why our focus at Bachat is on more on the passive investing, where we recommend most part of the portfolio to be invested. There can be certain delta which can be invested in few of the active funds, more so in the mid and small cap.
Yeah.
Large cap, I don't think there's any additional scope for generating alpha or over a longer period of time. Besides that, it is difficult. One of the other reason for choosing a passive fund is it is difficult to choose a fund which will outperform. So right now there are thousands of active funds which are available. Out of that, you need to choose one fund based on the fund manager capability, the fund house which is there, the past returns, and you have to choose that fund. It may happen that fund remains good for 1 year, 2 year. After that, it start becoming underperforming. Then the only point which you have, which you need to sell that fund, purchase another fund which you feel is a good fund. So this is a quite churning which happens in the portfolio, which is not necessary. And each churn which you have, you need to pay tax. Even though you don't need those money, you are selling that investment, whatever profit you have made, you are paying the tax for that. And then you are purchasing with the remaining amount, which becomes not effective per se. Passive investments takes away all these things. There is no reliance on fund manager. There is no reliance on fund house. Only thing we need to track is what is the tracking error in the passive fund, and accordingly invest in the right passive fund.
So you touched upon two very key words in this response. One was that effective investments. Obviously, I think that is what we should be thinking about, that our investments are effective rather than chasing the highs and then unfortunately suffering the lows. And again, the second word that you mentioned was that you want to eliminate the worry part of it. So people, again, coming back to the first point, which is the peace of mind part of it. And I'm sure that your clients also genuinely do appreciate that they don't have to worry about their investments, about how they're performing and what exactly is happening in the market scenarios. would want to talk a little bit about more into investing. The probably the most famous word in whenever we talk about investing is diversification. You earlier mentioned about REITs. We also earlier discussed about AIFs as well. Recently, in the past couple of months, there was a crazy run about around gold as well. So, in general, about these specific investment classes, or in general about the equity markets as well, would love to hear from you about diversification and how a retail investor should also think about it.
Yeah. So you have brought about a very important topic in financial planning, which is diversification. And the basic thing about diversification is you should not put all your eggs in a single basket. So that's what it make it. That's what it means. So what happens here is people have certain concentrated investment. In case a few of the people have invested majority of their money into real estate by purchasing additional home for investment point of view, which goes into lots of money gets stuck up there. At times, people have certain ESOPs or RSUs from the employer which have grown over the years in value and becomes a significant part of the asset. Many times, people just keep a significant amount of the money in the debt and fixed deposit and bank deposit and don't do anything about that. So, anything in excess of what is required in one specific asset is a risk as such. And diversification helps us in reducing that risk. The asset class which are available are equity, debt, real estate, gold and silver, which is there. Within equity also you have equity within India, global equity. Diversification ensures that you have an optimal allocation in each of these asset class, and there is no single percentage for each of them, right? So it depends on an individual to individual case. What is the risk profile of the individual? What are the goals for which we are planning? How near or how far those goals are, and accordingly the diversification needs to take place. But either ways, whether the goals are near or longer term goals, it is important to diversify the portfolio. People focus more on returns, but I feel the focus should be more on diversification and asset allocation, which will on a longer term will give you more returns than if you focus just on returns.
Right.
So that's why diversification is very crucial and important part as a part of a financial planning.
Just a follow-up question on that. Obviously, because these values do keep on changing, and not just for people who are your clients or who are actively managing their portfolios, what would be a good frequency to check if you are well diversified or not? Or probably for the larger audience who have not started their financial planning, what should be a good starting point for them to analyze their portfolio and then get started with the financial plan?
Yeah. So once you have your portfolio in place and you are investing on a regular basis, analysis if you do it once in a month, also once in a analysis if you do once in a year is also good enough because if we are focused more on the index investing, so major of the money will be in index, and there is no need to analyze the performance per se. So once in a year, analysis is good enough. At the max, if you want that once, it's not very frequently, then you can do twice in a year. But otherwise, once in a year, review of the performance and the portfolio is good enough thing.
Right.
And I would like to add further to this is at the time of evaluation, if the changes are minimal, you should be happy about that and not be sad about that. So the tendency is if somebody is reviewing the portfolio, they say that review ho gaya hai, the review is completed, but there is not any changes suggested. So what is the review done? You should be happy that there is no change to be required. You are on a right track and you need to continue on that track. So that would be the best outcome of any review.
Yeah. I mean, probably people might end up thinking that you are not doing anything, that is inaction. But again, as you said, the fact that you don't have to do anything means that the earlier plan, whatever you had, the earlier strategy which you had devised, that is probably the correct one, and you should again stick to it.
Yeah.
One thought again I have tangential to this is that obviously the people as well as you as an advisor, you will help your clients to stay on the right track. But in general, in the market, there are a lot of nudges. There is a lot of noise in general where people will, not just people, but influencers kind of things. People, they will try to make you think if you are enough diversified or not, if your portfolio is doing well or not, do this, do that, all these kind of things. In general, what is your take on these influencers? And you, as a SEBI registered investment advisor, Obviously, SEBI keeps cracking down on influencers as well. But you, as a registered investment advisor, how do you ensure that you are being compliant and you are giving the right advice to your clients?
Yeah. So influencer or financial influencer, as they are popular, is they are here to stay. So you cannot avoid that. And they are going to spread information. Few of the influencers are very good. The content they provide and the things they do is very good, but many of them are not able to provide you the complete picture. They may choose one of the topic, and in that topic they will focus only one of the aspect of that topic, and people just stick to that specific aspect of the topic, and they ask you the question now. This person is recommending me to invest in so and so fund. It will give me 20% return in 1 year. Why you have not suggested to me? Then we have to explain it to them, and 20% return may be probable, but these are the risks also which you need to take into factor. There may be cases where the influencer, this specific fund has given 15% return annually over the last 5 years. So if you invest now, you will get the same returns and your money will become double in 4 years or 5 years and things like that. Uh, Again, the very obvious red flag here is the past performance cannot be replicated.
Yeah.
So it may be 15%, it may be 20%, it may be 10% also. You never know. So all those things needs to be uh, uh, understand by the investor per se, and not blindly follow the influencer. SEBI here is doing a wonderful job. They are tracking down on whatever misinformation is being spread across over the web and the internet. But it is a vast, it is a very vast universe there. And it's difficult to pin down each and every influencer, and the videos are popping up on a daily basis. So that's where the RIA or the registered investment advisor comes into the picture. All the RIS are listed on the SEBI website. For example, Bachat has an individual and listing on the SEBI website with a unit number as such, and that is true for all other RIS also. And these are the person where one can approach and take the advice, and the person can be assured that the advice which will be given will be completely unbiased, it will be fair, and it will be after taking into consideration all the relevant aspects which needs to be considered per se. So that's how a person would approach the investment and not just rely on an influencer thing. In fact, Instagram reels are best to look at where to go for next holidays and which restaurant to eat, but not to look at where to invest.
Right. Perfect. I mean, perfectly summed up. And again, as you said, financial influencers, they are here to stay. Many of them will have genuine good intent about spreading financial literacy, about improving financial education for all the viewers. But in general, when it comes to investment advice, when it comes to actual getting the financial plan, probably you guys are the best to actually consult and actually then work on it as well. Would have a minor selfish, sorry, a minor selfish question from Spring Money's point of view. We obviously, as Spring Money, we help people connect with people like you who are SEBI-registered investment advisors again. What different thing you would like Spring Money to do so that we can help people better and then eventually help them make better financial decisions as well?
So Spin Money is helping creating content with the help of the registered investment advisors and providing the right way of guidance on how to invest in other things. So, which is the one of the good things which Spin Money is doing as such. Uh, the way it is differentiating itself from other influencers which are available on the website is they are not just generally talking about any popular topics or what which is currently as a fad, but focusing on the key concept of financial planning, personal finance, and speaking to the right person, which are registered investment advisors, and helping their viewers to understand about the nuances of financial planning, which is the good thing which needs to be continued. There are very few people or resources which are available which does such things, and it will be really helpful for all the investor community.
Thank you for this. Thanks for your kind words for Spring Money, and obviously we keep looking up to you guys to actually learn which direction we should also go into, and what we should be building as a personal finance platform as well. Any final concluding remarks? Sorry. Any final concluding remarks around financial discipline, around in general building a strong financial foundation for our viewers?
Yeah. So Financial planning, if you want to do any financial planning or start in your investment journey, my advice would be try to keep it simple, try to keep it very easy, not to complicate it. There are many marketing advertisement which goes on investing so and so streams and which will give higher returns. No need to do that. Keep tracking of your income and expenses, reduce your leakages whichever wherever they are. Keep on investing in a very simple, easy, low cost funds and investment avenues. Continue doing that regularly. Review that once in a year in case any rebalancing or rebalancing needs to be done within the asset class. Do that and leave it. Not to look at your portfolio on a daily basis, not to worry about that. And believe me, you will be able to achieve all your financial goals over the period of time. It's pretty simple, but difficult to implement. So that's where it is.
It is very nice of you to say that it is very simple. Genuinely boosts the confidence for even non-finance expert like me also that things will be realistic, things will happen, and I will be able to achieve my goals as well. And I'm sure that all our viewers will also have the same confidence once they meet you, once they meet any financial advisor or a SEBI-registered investment advisor as well. And I hope that they genuinely do achieve their goals as well. So thank you, Vishal. Thank you so much for joining us and for your time as well. One last final question before we end this. What is the best place to reach you to connect with you? It would just help our viewers as well.
Yeah, so anyone who wants to get connected with us, they can go to our website, which is www.bachat.money. Free Money website will also have a reference to our offerings and various things. And we are also associated with the Fee Only India group. So Fee Only India website also has a list of all the RIs with those fees-free advisory, and we are part of that. So they can go through that also.
We'll ensure that all the links are in the description of this video.
Thank you.
And again, once again, thank you so much for joining. Thank you so much. Have a good day.
Thank you, Omkar.